And meanwhile, Mr. Livornia joins us now. Joe, welcome to you. Thank you so much for joining us.
Thank you.
So what are people supposed to make of this? I mean, you go back to Liberation Day, and you had the predictions from J.P. Morgan, 60% of a chance of a recession. And I don't know, there was doomsday all over. And here we are, and companies and stocks and consumers are thriving.
Yeah. There was a lot of doomerism or doomsday calls. Some people had recession probabilities up at 90%, 90% plus. And what we saw was the fastest, biggest, quickest recovery in the S&P 500 after a 15% drawdown ever, which is remarkable. And what's important is financial markets are forward-looking, they're anticipatory. So even though we had some data that might be disappointing to some, the trajectory for growth is certainly much higher. A second half boom is in order. The One Big Beautiful Bill, as you know, is now law. We've gotten numerous trade deals with many of our major bilateral trade deals. And also related to the recession call that hasn't happened, the fear about inflation and rising cost of living has not panned out as well. The tariffs has not been inflationary at all. Instead, they've generated a tremendous amount of revenue.
You know, as counselor to the Treasury Secretary, interest rates are of huge concern. I've got a panel coming on at America Reports this afternoon where we're going to dig into some of the biggest concerns right now for people at home when it comes to their finances and their investments. And we put a lot of feelers out there, whether it's inflation, whether it's tariffs. Really, it seems the biggest concern, the overwhelming concern of people at home right now is interest rates and seeing them eventually come down to get the housing market going again, to spur more economic growth in general. So is that going to happen? Are those interest rates going to come down in September?
The interest rates are high. First-time home affordability is close to a record low because mortgage rates, which are a huge input into that calculation, are high. And interest rates, broadly speaking, as determined by the Federal Reserve, are high. They're high by their own estimates. If you look at where the Fed thinks the neutral rate is, in other words, the rate that will neither help the economy up nor push it down, we are well above where the Fed thinks those rates should be. So by their own definition, interest rates are too high. They're holding the economy back, and certainly they're weighing on housing. If you look at financial markets, they anticipate an interest rate cut in September. They anticipate multiple interest rate cuts, similar to what the president's saying. So we'll see what happens. But certainly from an inflation perspective, the Fed's own work, interest rates, one can make a very powerful economic argument they should be substantially lower.
We'll see what happens with that next. Meanwhile, GDP, this is a huge discussion. Gross domestic product for the second quarter of the year also showed growth for the economy in the data that has been released this week, Joe. So Democrats still are going after the president's economic policies despite all that. Byron York's new column is calling out those Democrat critics with this headline: from he's crashing the economy to it's a mirage. An excerpt from it reads, obviously, Democrats want to diminish President Trump's accomplishments in any way that they can. That includes talking down the economy. But when they say the president's crashing the economy or that economic growth is a mirage, they only make themselves look less credible. How about all those doomsday sayers out there, and, you know, the recession is coming, and this is going to lead to, you know, the worst economy America's ever seen. And here we are today. Weigh in on the politics of this moment. What does it mean for those critics?
Well, I would say, look, the economy has rebounded dramatically. The president, with the help of Secretary Bessent, was able to get the One Big Beautiful Bill done by July 4th, which people did not anticipate. Now that that is law, we are going to reap the benefits of that. Inflation has come down, which has expanded worker wages significantly. We've talked about it being a blue-collar boom, which is, if you look at the wages adjusted for inflation, they're rising essentially at their fastest pace ever, only eclipsed slightly by President Trump's first term. And you've had recent all-time highs in the equity markets. I mean, what does that tell you about President Trump's policies? The markets are validating the president's policies, and as growth continues to improve, it broadens. The productivity rises because of all the capital the investment companies are going to be incentivized to make. The countries and other commitments from overseas of bringing capital into the U.S., you're going to get strong growth. And if the Democrats want to argue that's a bad thing, then so be it. They'll look incorrect, as they have been, and President Trump will reap, rightly so, all the rewards from those policies.
As I always caution, markets could take a breather here. I mean, they've been at all-time high, and sometimes things do get a little overpriced, and that could certainly happen as well. But there is no doubt there is a lot of momentum in this market right now, and certainly stocks have gone up since all those doomsday predictions back in April. Joe, thank you for joining us.
Thank you.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.